Good morning. Happy Friday. It's Friday, June 14th. I got my notes up. Okay. First off, I had like 6. I am a chocolate dude and I love chocolate chips. So what did I do this morning? I had a nice healthy breakfast of some eggs with spinach and a date bar, which is just dates and cashews. If you haven't looked it up, look up cashew cookie from Walmart. It is just 2 ingredients. It's from Larabar. It's a knockoff of Larabar one, but it is really, really good. It's a lot of sugar, but then I felt like I didn't have enough sugar. So I basically cut the corner off of an enormous bag of chocolate chips and I just shovel it into my mouth. And so I had about 6 mouthfuls of chocolate chip. So I am flying high. I expect to crash around 11 o'clock. So if you're on here on the live and I'm still on at 11 o'clock, you're going to see me roaring kitty-like. And we're going to go over that. We're going to go over roaring kitty because the story is just amazing. Absolutely amazing. We're going to go over, looks like some resistance levels, some things you can look at. With a red flag to watch. Josh Brown said the greatest thing. He said, get out of cash right now. I bought VRT. We'll go over why I bought VRT. It's Vertiv. CELH we'll go over. SMCI, NVIDIA we'll go over. We'll go over Pepsi. Snowflake had an insider buy. CLS is a dip that maybe you could buy. PepsiCo and Apple versus Microsoft, which is interesting. ARM is being added to the NASDAQ 100. The whole Tesla situation. I was wrong about one on earnings, but I was right about the other. We'll go over those 2 from last night. And there's a article from Steve Kress, 4 hot quant stocks to buy for July. And if you remember July is 100% win rate on QQQ. We're looking at QQQ right now. And this is Trendspider. By the way, if you are thinking about signing up for Trendspider, there's a Father's Day sale that goes on for 2 days. I will tell you, I'm not linked in to Trendspider and know what their pricing strategy is. And I know I've been saying, hey, you get 6 months for free because it's 50% off now. And it's been 50% off for a while. Don't sleep on this. And the reason I say don't sleep on this, I have a feeling they are going to take this back to full price. And it's right now it's $642 a year, $53 a month, $58 if you just go the hand. That's only $5 more. They took that price down tremendously. That gets you from 30 alerts up to 100. And yes, I use alerts. 5 simultaneous trading box to 30, 3 active windows to 10. 30 days to 90 days. If you want to know, I'm on the enhanced plan. I'm not on the advanced plan. I'm an affiliate and I'm on the enhanced plan. I don't use half this stuff, but the 100 simultaneous alerts are tremendous because what I do is I set an alert for stocks that I'm looking at. I set an alert to sell when the 4-hour algorithm tells me to sell, and I set up an alert for a buy. So I currently have about 30 or 40 alerts that are set up, about 15 or 20 stocks, somewhere in that neighborhood. And I just set up those alerts so I don't have to sit there and look at charts all day. And the 4-hour algorithm, we'll go over this. If you're new here and you're just looking, we'll go over the 4-hour algorithm. This is the 4-hour algorithm on Trendspider. And how do you sign up for Trendspider? By the way, the first part is Linktree down below, linktr.ee/dailystockpick. It is on the screen. And it's right here. It's the top link. So sign up for Father's Day. Give it to your dad as a gift. Just say, hey, daddy, I got you a gift. But here's the cues. And we've talked about 460 being the support level. I continue to say that 460 is the support level. We do have a gap from a couple of days ago between 478 and 468 and 471. Don't pay attention to it. It is a small gap. We will fill it at some point in time. Between now and the end of the year, you will have this pullback on the cues. Right now, the cues are they're down a little bit. We're looking at down 0.12, but 460 is still your resistance. We are looking at an extended MACD. We are looking at an RSI at 76. We'll go over all of this, but I do want to first talk about this Roaring Kitty situation. It is nuts. So Roaring Kitty revealed that he updated his position. He sold out of most of his calls. He sold out of all of his calls. And he now owns 9,001,000 shares. 9,001,000 shares. He basically owns the same amount that Ryan Cohen, who's the CEO, has it. But he just exercised all the options. What he did was he basically sold out of his options, which were June 20th. We're at June 14th. He sold out of his options, took like a $13 million gain on those options. And then he bought shares with those options, with the proceeds from those options. He didn't exercise those options. And there's a clear difference. You can tell by the price that he's paid on his screenshot. And yes, it is confirmed. This is his screenshot because he confirmed that in his live broadcast last week. This lines up with Kitty's recent tweets of the office meme. This is the exact number that Ryan Cohen hit. This is what's crazy. The night following his meme, GameStop added an Easter egg to their website. Internet detectives were quick to find. If you click the copyright symbol in the upper bottom, in the top bottom of the page, it gave you a reference to Kitty. Today, meaning yesterday, GameStop's annual meeting was cut short by technical issues. They said there were too many people joining. Some were curious as the possibility of a DDoS attack. They said that there wasn't. I'm here to tell you there was no attack. There was no faulty servers, and it was all intentional. The meeting has been rescheduled to this Monday. What is the significance of this date? It's National Take Your Cat to Work Day. I mean, is he being added to the board? Is he being added to the board? I don't know. He could be on the board of directors. I think he's in contact with the company. If he's being added to the board of director, this is a massive, massive, there's going to be SEC investigations left and right on this. But I'm not trading GME. I'm out of GME. I'm captivated by this story and the fact that it's National Cat. What is this freaking country? National Bring Your Cat to Work Day? F. Hi, my name's Gary. My pronouns are they, them. I don't know. I'm kidding. If I actually brought my cat to work day, I don't know what my pronouns would be. And I'm not making fun of anybody with pronouns. I'm not making fun. I'm just saying it's absolutely absurd that this country. Now, would I take my dogs to work? Absolutely. Do I think there should be a day, take your dog to work day? No. Penny is going to F you up. If I take Penny into work, she is going to F you up. That's it. She's going to F you up. Now, here's one of the things that I was talking about is stocks at a record high, but here's one red flag to watch. This guy's looking at the Qs, and he points out that the RSI is in overbought territory. When prices are making higher highs, but the momentum indicators like the RSI are making lower highs, that's a red flag. We've seen the SPX making newer highs, but momentum isn't as strong as it used to be. Amazon and others have already shown signs of weakness. So he posted a chart of Amazon. We can take a look at it. Look, it's going up. I mean, the RSI on the 4-hour is at 76. We're seeing this up. I continue to say this. Do not think that somebody's screaming that there's going to be a crash. Don't run for the hills. Amazon is in a retraction. We talked about it. It got to 188. It rejected off. It can't hold that previous high. The MACD is crossing down. We are seeing weakness in it. But it doesn't mean you go running for the hills. I am not running for the hills. I sold Amazon at 176 down here. Was that a mistake? Probably. I sold, 50 shares, something like that. It wasn't a lot of money. But the reality of it is, I didn't want to go below the 200-day. My average price, the cost for this sale was like $60, $70, maybe $40. I forget. But was it going to make a huge difference for me to hold on? No. Did I buy at 181? No. Am I selling at 183? No. Because I think we will probably make the run and we'll get to the higher, more 188. We said it before with Apple. And it was right. All Apple needed was the catalyst to get it over 200. It got there. Now that turns into support rather than resistance. So, again, when people kind of tell you this, you've got to understand that you can take a look at this stuff, but don't just listen to somebody and then panic. If you're losing sleep over stuff, that means that your portfolio is out of whack with your own internal clock that says, okay, I need to adjust my risk. So if you're adjusting your risk, adjust your risk, but don't let somebody make you lose sleep in the middle of a bull market. If this does get a 10% pullback, it's not going to be on a one-day case-by-case basis. It's going to be little by little. So you'll have time to pull out. Now, with that said, and if you want to go read that article, go read that article. With that said, there is a great 9-minute video. No, I'm sorry, it's 55 seconds. From Steve Wagner Invest. It's Peter Lynch, who is vice chairman of Fidelity Investments. He's a legend. He ran the Magellan Fund. This guy just, if you're going to listen to him, listen to him. And he basically says, hey, don't let everybody, scare you out of this market. And he's not, I don't know when this is from, but he's just got some great things historically. If you ever want to just go down a YouTube rabbit hole, just type in Peter Lynch and you'll find a bunch of stuff. Josh Brown said it best yesterday, and this is it. Josh Brown said, get out of cash. He's been telling his clients for the last 4 or 5 months, get out of cash. He says you're going to see rate cuts, and if you're in a 5% savings account, that will go down to 2% very quickly. Get into bonds or something other than cash. This is a 3-minute video that I'm going to post in the newsletter. The newsletter is 100% free. I will post the link to this video in the newsletter. But he says get out of cash. Why should you get out of cash? We're in a bull market. Now, the reality is he says get out of cash, and he's been putting people into bonds because you're not going to have 5% savings interest if the Fed actually reduces rates. Your interest rates will start to go down in those. So he's been taking some of his quote-unquote safe clients into bonds. That's where you get into bonds, and it's a once-in-a-lifetime thing to get into bonds. We can go over to bond stuff if you're interested. I am not moving to bonds. I am not a bond investor. People have tried to get me into bonds. It's always wind up that I'm like, I want that cash and growth. And I don't care if I pull back. I'm a different kind of investor, and we'll go over that in the social request too when somebody asks me, how much do I have in ETFs? But I don't want my stuff in bonds. But Josh is saying the smart money is putting people who need money in bonds. Listen, I've got enough money that I don't need income, okay? I can make my income off of growth. I'm smart enough that I can trade stocks for income. I can do some work for income. Yes, I make money off of this podcast. I am at a high as far as money this year because the podcast finally started making money, because I started an affiliate relationship with Trendspider and Seeking Alpha. So I am making money at this podcast. Is it enough to live on? Absolutely freaking not. I need this trading. So I can make money trading. I don't need a bond to make me money. The only reason that I would get into something with dividends, the only reason why I would get into bonds is if I needed to, protect my capital, because a bond protects your initial capital. If you're in a dividend stock, remember, the money that's paying that dividend comes out of the stock price. So you're not protecting your capital versus a 5%. If you're in a 4% dividend stock that's not growing, that doesn't have growth, the F are you doing? Get a bond. Just get it. If it's in a brokerage account, get a treasury bond. They are tax-free. They're paying close to 4%. Why are you in a 4% stock that's not growing? Again, we talk about dividend stocks. I'm not a fan. But, Josh Brown said it best. He said, get out of cash. Now, I bought a stock yesterday. It's VRT, Vertiv. We talked about this last week. I said I wanted to get in. What did I do? I set an alert in Trendspider. And I said to Trendspider, tell me when there is a buy on Vertiv. Well, it told me yesterday, 93.69. 93.69. Where's it trading right now? It's at 94.53. So I bought it, I think, at like 93.80. I got in there. I was out doing something. I think I was cutting the lawn. I got the alert. I came inside. I said, it's at 93.80. Let me just buy it. Yeah, it was yesterday afternoon. There are 4 reasons why I bought this. First, MACD, super low. Below the oscillator, crossing up. Simple as that. RSI, coming off of oversold territory, way down here at 37 when it was trading at this price. The open at 87.58. I wish it would have gotten at 87. but I didn't. But it was down there. It's coming off there. It's oversold. It's just at 49 right now. Confirmation above the 9-day. That 9-day has confirmation. We're seeing the button hook on that stuff. Okay. And the 50-day and the 200-day are positive. Your 50-day is flattening out. But as we continue to go, we will see it. Now, what am I looking at for this stock? I will absolutely look at this price. Let's see, the high at 110, I think is the high. Let's see, 109. 109.27 is the high. So if we look at 109.27, that is the resistance level. So what am I looking for? I'm looking for it to get somewhere near 10%, okay? That's a 16% upside. If I get near 10% in the next week or two, I'm pulling out of this one. It is a good stock. I like Vertiv. And this is a positive article on Vertiv. Analyst ratings at publication, buy. The investment thesis manages cool data centers. The business is very well positioned. I told you. I saw the CEO on CNBC. I was very impressed. The quant has it as a hold. Okay? This is a great article on this, but if we want to look at the quant, it has it as a hold. And why? It's the valuation. Now, if you look at the PEG, it is trading 61% again, below the sector. So their growth is what's going to drive them. Now, remember, this is cooling stuff. So this is right in competition with SMCI, who just announced cooling at the rack level. This one does it on the data center level. SMCI is doing it at the rack level. So there's some differences there. But again, it's electronic components. It's rated 13 out of 68. What's your number one in this one? AMSC. What's your number two? I brought it up yesterday. Powell. Powell is the number two, and we saw some pullback on that one. We're seeing it give back exactly the gain that it had yesterday. So you're seeing some of this stuff, but I did buy it. Now, you might be saying, why are you looking to trade this one? Well, look at Vertiv here. This is an article that goes over a sell rating from a Seeking Alpha analyst. And this is from this morning at 4:59 a.m. This is the other one was from this morning at 8 a.m., the buy. Different people on Wall Street can have different opinions, and the market is the only one that will tell you whether you're right or wrong. What's the average target price from Wall Street? $101. Oh, look, we're looking at resistance at $109. $101, which is 6%. We're looking at resistance at 109, which is the previous high. If we get up to 101, I'm still looking at a 6%. If I see weakness, I may buy more, but I may just get out. This one might be just a trade, but it's VRT. I like the stock. I like the sector. I like access to it. We saw SMCI go crazy yesterday. One that you guys love that I haven't loved is CELH. And this is a chart from Trendspider that shows the weekly hollow candles. Once revenue stalled, it was assigned to proceed with caution. Once revenue stalled, this is the quarter over quarter revenue decline. Okay, 95%, 0.2. Q1 2024 revenue decline. CELH has not been done going down, and we have even their partner Pepsi. They've been on a 6-day losing streak or something. I've told you before, do not try and time this. People always ask me, well, when should I buy? The algorithm would get you in when it finds the time. I didn't want you buying at 68 just because it had that support level. I didn't think it made sense to buy it at that level. So again, you have to have the tools in your arsenal to be able to do this. But CELH, I'd kind of wait for it. Now, NVIDIA. Is this one? Oh, no. I want to go over SMCI. SMCI went crazy yesterday, over 800. And it's given back a little bit today. It's down 3%. But it was under 700. And I said, hey, if you get this under 700, you absolutely should. I'm sorry, under 800. You absolutely should. Yesterday's morning was up 10%. Yesterday's afternoon, up about 1%. I think it wound up the day something up a little bit. But this one, we're seeing confirmation. Do you want to buy this? There's some catalyst for this. I saw the CEO on CNBC yesterday. I was incredibly impressed. Yes, he has an Asian accent, and it's hard. They had captions to tell you what he was saying. But he was saying the right thing. They are shipping out at record inventory numbers. They should have record profits. The question is going to be that profit margin. And SMCI, that's been the issue, is the profit margin. Now, we can look at it in the quant. It's still a strong buy. Let's see. Let's pull it up. It's still a strong buy in the quant. And I will tell you, this has been a strong buy forever. Now, the profitability has been a D, and that's where you're coming down. 15%. We talked about Dell having like 20%. We talked about Hewlett-Packard having like 40%. That's where you're going to get killed. But again, that's the thing. Now, NVIDIA, on the other hand, NVIDIA crossed 130. It's up 165 year to date, $1 trillion in market cap. This was interesting. Since last earnings, it's up 38%. The 10-for-1 stock split made it even more liquid. The funny thing is, even if you bought right now, if it were to drop, it might be one of the easiest buy the dips ever. Why? Broadcom crushed earnings. Crushed it, $3.1 billion of AI sales alone in the last 90 days. Oracle crushed earnings, $12 billion of AI sales in the last quarter from the 30 deals, including a big one from ChatGPT. OpenAI was rumored to have doubled their revenue to $3.4 billion in less than 8 months yesterday. The price action feels insane, but the growth is just not stopping yet. It's just not stopping. And NVIDIA is one of these companies that you want in your portfolio. Could you see a 40% pullback on NVIDIA where you go down to like 80? Yes. Yes. Is it likely? No. Wall Street does as a strong buy. The quant says hold. Why does the quant say hold? The valuation, but look at the PEG ratio. And that's it. The growth is phenomenal. 208% year over year. Now, they've got to continue that growth in order to continue this price, the PE. When we look at the valuation, it is extended. It's 72. You're paying 47 times forward earnings. But if we go over here and we look at and we're going to select metrics, we're going to get rid of the price return. I don't care about the price return, but we're going to check the valuation, and we're going to check the trailing 12 months PE. Okay, trailing 12 months. This is the trailing 12 months. Again, it's 200. Look, it's not as expensive as it was in 2023. That's 1 year ago. That's 1 year ago. It traded up at 240 trailing PE. Since AI has come in, it's gotten cheaper. And every time you've gotten cheaper and then they release new earnings, it just trails up to that previous one. So here, in right before their earnings, in April 26th, the PE was 73. It dipped down because they had so much earnings to 50. Where are you right now? 75. So if you were going to buy on, let's see, April 26th, if we go to NVIDIA and let's see where the stock was April 25th, because again, the PE was fit the same as it is today. Let's see, April 25th, you were at, let's see. Oh, ironic. Algorithm gave you a buy, and that's the last buy you had at 83.82. It is not crazy to buy NVIDIA right now. If you don't have NVIDIA shares, Steve Weiss on CNBC yesterday, I think he bought a ton of it. But again, you want to stick with a plan. If you buy it now, this is a long-term buy. This isn't something that you're going to trade. If you want to trade something, go and trade GameStop. But what do I have to do? I have to actually go to the core portfolio. And again, these stocks are free. Follow me on the core portfolio at Savvy Trader, and you can see this stuff. If we compare the core portfolio against the Qs, now we're coming up on a year. I've had this for a year now. And so the core portfolio is up 42%. The NASDAQ is up 29.23. Now it's 100 shares of each stock. What do I have to do? I just got 10 shares for every 1 share of NVIDIA. I have to sell 900 shares. I will take a incredible cash, and I will have tons of cash to spend. Tons of cash to spend. I just buy 100 shares. Now, I will probably take Boeing. Boeing is just crap. I will probably take it out of the core portfolio, and I'll replace it with Dell. I mean, that's essentially what I'm probably going to do. But again, NVIDIA, take a look at it. We talked about CLH. PepsiCo continues losses for 7 straight sessions. Pepsi is in the core portfolio. It is in my personal portfolio as well. Do I like it? Buy it under 160. If you can get this under 160, you absolutely should buy it. At 163, I think the valuation is there. GLP-1, that's a problem. If we go and we look at Pepsi in the, let's go over here. It's a strong buy in the quant. I don't think that there's anything necessarily wrong with this one. The valuation, a little bit stressed. But, again, they're 28% above on the growth. That's where the problem is. It's the growth. It's only 4.36, 2.84 on the thing. But historically, they've had better growth. Again, let's look at the Wall Street buy. Price target at 186. It's 14% upside. I love Pepsi. I drink Pepsi. That's why I own it. Am I adding to it? Nah. Again, we're in an AI and GLP-1 market. If you don't have Pepsi and you drink Pepsi, you should absolutely get it. But again, it's just really, really weak. I think yesterday or the day before, I got asked, should I buy more Apple or Microsoft? Ironic, because just yesterday, this was posted at 212. This is Mark Hibben, an investment group leader over at Seeking Alpha. He said Apple versus Microsoft, AI matchup. I would argue, and again, I don't know, but I would argue that Apple is the clear buy. And that's because it's 50% of my portfolio. I think 9% is Microsoft. So Apple or Microsoft, I own both. I wouldn't say, you should own one or the other, but I would say, hey, it's a good one. Now, let's talk about Tesla, because Tesla here in Seeking Alpha, it is not a buy. It is a hold, and it's a valuation. It's a growth story. The profitability is there. Their margins are still pretty good, but they're coming down. Momentum is horrible in this stock. Right now, it's trading at 185. If we look at the chart, what happened yesterday was the shareholders actually voted. To said it yesterday, Elon had announced it early that they approved his pay package. They approved the relocation to Texas for the corporate head, for not the corporate head, but for its incorporation from Delaware. You had a buy here at 183.72 yesterday. I said, be careful about it. I think it's temporary. I think the pop is blah, blah, blah. Elon was Elon yesterday. He went full Elon, talking about the robotaxi fleet, talking about the robots, talking about everything that is Tesla. And it was just unscripted. It was classic. Now, what I want to caution you about as a Tesla owner is, and this clip is going around on the internet, and it's going around news stories. He likened robotaxi to Airbnb. So Tesla owners could basically add their car to the robo fleet at any point in time when they go on vacation. They could just add their car, and he said the monthly revenue will greatly outweigh the monthly payment for a Tesla. So you'd be basically having a free car. I would argue this, and the reason I would argue this as a Tesla owner, if you send that car away to actually do a couple of routes, how's it charging? And that's where I'm just not sure what is actually going on. Is the car going to go to a station where people will plug it in? And then does Tesla pay for the energy, or do you pay for the energy? There's a lot of kind of, okay, how are we doing this? But I will tell you, if he gets it solved, Uber and Lyft will absolutely get killed on this one. Lyft specifically, Uber will get killed on it. And we're seeing Uber bounce right up against this 200-day. And we're seeing it having problems get through. Now, the 50-day hasn't turned completely positive yet. And we're seeing a little bit of a button hook. But I would expect this 68 to 70 range the earnings gap down, we've covered it. There are so many earnings gaps down that we had this quarter that have been covered. This is one. Starbucks is another. Roblox is another. But this one in particular, it was covered. If you bought in here at 65 or 63 like I did, then we use that support to get up here, and we're up 10% on that buy. We are up more than 10%. So I do want to warn you about that one. I don't think the Tesla is an automatic buy here. What is it? Answers by ChatGPT, which is a bot on YouTube. It just commented and said Tesla will close above 190. I don't think that's the case. I think you've got significant resistance at 190. We've seen it. Right here, this candle went up to 186 and it rejected off. We haven't seen it go back to that month. Remember, there is a lot in this court case, a lot that's not done it. News that came out yesterday, ARM, which was a recent social request from somebody. ARM is getting added to the NASDAQ 100. It will replace Sirius XM. So it's being added to the NASDAQ 100. It is up 1% today. It's at 160. I can't imagine buying it at this price. It's still a good business. But again, in my mind, it's just stretched. Let's talk about earnings yesterday, because if we go over to Earnings Hub, I was completely wrong about this one. Completely wrong. Now, I will tell you I was wrong about it, but I wasn't super wrong about it. The earnings came in. They beat by 2%. This is Adobe. They beat by 2%. Revenue beat by 0.36. But they did announce incredible guidance. And that was what popped this stock. It's up now 20%. It was up, I'm sorry. Let's see. Adobe is up 14.22. It was up 15%. We had this buy at 464. I said, hey, you really, really want to stay away from this one because of the AI stuff. They talked about the record AI stuff. They talked about monetizing AI. It's incredible. I mean, you had this golden cross. You pulled right back to this. The 50-day hasn't crossed down. The Bollinger Bands were kind of expanding out. Now we're seeing the pushback up. It just was a good quarter. And it soared on its outlook. Better than expected results and its outlook. Now, one that I was right about is RH. RH is down 15%. This you had no business in getting into something that sells $10,000 couches. Their earnings per share down 233%. Somehow their revenue went up 0.3, but it's down 15%. I would argue this is not a stock that you want to be in. It's not AI and it's not GLP-1. And they're having higher for longer hurts this company because I don't know too many people who are going into Restoration Hardware and saying, give me the $10,000 cash and couch and I'm paying cash. So yeah, I was right about that one. It's a little bit, but here are four stocks that Steve Kress from the Quant team. July. We talked about July being a seasonally hot month for many tech stocks. Don't know why. Have no idea why. But if we go over here to Trendspider, and again, see how I'm switching tools back and forth? You want both tools. Whether you have Trendspider or a charting tool, whatever, you should have seasonality. Seeking Alpha does have some seasonality stuff in there. But here, if we go back, let's see, we're not going to go back to 2018. Let's go back. QQQ, we can go back to 2014 because that's a 100% win. That's over 10 years. 10 years, 100% win. We can go back to, let's see, 2010, 100%. That's what? 14 years. 10 years, 14 years. Let's go back to 2005. 2005, that 19 years is where you get to 89%. Still, the mean, let's see, 4.4%. So this is one that we're going to play. We're going to do this. We're going to buy TQQ in June, and we're going to try and ride it out through July. But these are four stocks that you want to look at that might be hot in July. I'm not buying any of these, by the way. They are all quant related. And let's see, recognize seasonal trends can help investors. Seeking Alpha's seasonality cards identify the hottest stocks for each month with seasonality charts that show up 11 years of monthly stock performance. July has been one of the S&P's hottest months in the past decade. Positive returns for 9 straight years. 9 straight years. So again, we're looking at July. This isn't something. Now, I talked about Savvy Trader. We're going to do that one. Let's get to our social requests. Melissa from Facebook. What's everyone's opinion on Confluent? I didn't look what Confluent does, but I did look at CFLT. Let's look at CFLT. Chart wise, I don't know what they do. Nice backfill on the gap here. The gap was from 24 up to 30. You came right back down. Earnings, good. And then you came right back down. Ever since May, it's been super, super weak. Algorithm winds up losing you 33%, but you make 19% on this one. So it's not a great one. If we go to the weekly and we look at where we're at, I would say this isn't one that you want to take a look at right now. Looks like an IPO. CFLT. Confluent. I'm going to close that down. Let's look at Confluent in the summary. The quant says strong buy. Confluent tops as Hazeltree's most shorted mid-cap stock in May. Most shorted stock. Let's see. CFLT making all the right moves in time. Stock will be rewarded. Stick with the thesis. Confluent is a buy with accelerating growth in Confluent Cloud. It's a cloud one. It is an information. It's application software. Sorry. I don't care if this says it's a strong buy. It's software. Software is going through a tough road right now. I would say you wait. I don't see any reason. The 52-week range is between 1469 and 4122. You're right in the middle at 27. You don't know where this one's going to go. You could go back down to 14. I mean, we can take a look at the valuation of it. You're paying 137 times forward earnings. 137 times forward earnings. I don't know why it's a strong buy, other than revisions. Revisions 26 earnings per share up, none down. 28 revisions up, one down for revenue. If we let's go to the Wall Street stuff. Let's see what the target price is. Let's see. Target price 35.30, 26% upside. I mean, you can decide what you want. I'm not leading you into a software play. It's up to you. Josh, hey, Gary, what are your thoughts on Datadog? I'm intrigued by the PE and insider selling is what's keeping me on the sidelines with this stock. It's not just insider selling. This is a database company, and it's considered software, application software, and it's the same thing as Confluent. I don't think this is a bad one. It's a hold in the quant. The valuation is an F. The peg is high. I mean, everything about this one just says it's overpriced. The growth is a B. You're growing 25% year over year. The insider selling on this one, I think that's been overdone because I don't think it's huge, but I think these guys are just, they're building pools in their backyards. I mean, it's not like this has all of a sudden been crazy selling. They've been selling forever. So yeah, back here in April and March, it was huge. And then in June, it's big again. But I don't know that that's necessarily a reason to stay out of it. Performance year to date, minus 1.52%. They're making money, but their PE is super high. Now, if we look at the chart on this one, I think you could try and trade this one. Datadog, DDOG is the symbol. I mean, the chart to me is just riddled with problems. These gaps are all over the place. I think the candles are extremely high. I think your MACD, if you bought here at 113 and you made it all the way up to 119, kudos to you. The algorithm makes you 7%. Buying and holding makes you 10%. I just think that there's better places in this market than software. That's it. Mega from Spotify. Awesome podcast. Thank you so much. No, thank you for listening. What are your thoughts on Carvana? So if you're new to the podcast, I sold my Tesla. I bought a new Tesla in March, and I sold my old Tesla, which was a 2018 that was built in the tent. And Tesla offered me $17,000 trade-in. I went to Carvana. I put the car in, and they offered me $22,000. Now, they listed it for $28,000. I thought maybe I could get $25,000 for it on the private market. But I didn't want the hassle of people showing up. I didn't want the hassle of actually scheduling stuff. I didn't want the hassle of figuring out the money. I didn't want the hassle of actually haggling. It was worth me just selling it for $22,000, which is $5,000 more than Tesla offered me. I didn't know how they were going to make their money on this car. Now, this is in my mind, they give you a coin and then you pick the car out of an effing vending machine that brings the car down to you. And when the when the CEO was asked about this on CNBC, he said, yeah, it's an experience and we're giving people the experience. How much does that freaking experience cost? That's my question. And so Carvana, it has been a phenomenal stock. Do not get me wrong. This is the recovery that we're seeing. You're seeing it bump right up here against that 130 on the MACD on the 200 day. On the weekly chart, you're seeing it right up against that 130. Now, does it belong at that 130 price? We can look at it. Historically, this is just a crazy year to date. This one is up 354% in 1 year. In year to date, this one is up 101%. You've doubled your money in 1 year. Your 52-week range is between 20 and 129, and you're at 103. And you're still overvalued. They're not making money. They don't give forward guidance. Their growth is horrendous. They're losing 11% in revenue year over year. They gave me $5,000 more than Tesla was going to give me for a trade-in. Profitability? They have margins of 17%. That's not great to me. That's not fantastic. Momentum? You can't beat it. Momentum is a hard thing to break in the market. So they are incredibly up there. Now, revisions, 12 up, none down. 21 up for revenue, none down. So they do have momentum on their side. They have some type of thing. Maybe all these Wall Street analysts are going and putting the freaking coin in the vending machine. I don't like it. I don't like the automotive retail sector. I am not a fan of it. It just costs too much. And that would be my take on it, Mega. But I have been wrong. I wish I would have put my money in a year ago and gotten 354%. I just think the risk is there. XL, what's a good price at Exxon? $10. Exxon's in the core portfolio. 109, this one constantly trades based on the price of oil. But 120 is your resistance level. That has been a significant resistance level for quite a while. You're crossing down on the MACD. You're crossing down on the 200-day. Your 50-day is negative. Your 200-day is still positive, but everything about this is negative. It is oversold. The RSI is at 31. Every time this one gets down here, it sees a little pop up. But this trades on the price of oil, and oil is at 80. There is an election coming up. If you think that this administration wants oil at $100, you're crazy. They are going to inject some type of ability. If the Saudis reduce the oil flow because they want Trump in the White House, and yes, make no mistake, that's exactly what's going to happen. They will probably reduce the flows of oil. The Biden administration will do something to inject, and they will basically reduce the price of oil. And that will hurt Exxon. So this just trades on the price of oil. I think if you can get it for under 100, get it for under 100. I sold out of this. I don't own it. The only oil that I currently own, the only energy that I currently own is Oxy. And the only reason I own that is because Warren Buffett continually just buys it. And so I own it. So Exxon, there will be a time and place to buy Exxon and add it to your portfolio, but I do think it's a trade rather than an actual buy. And we can look at the energy sector overall. The energy sector looks just like Exxon. And we've broken through the support level. So I don't know where the current support level is. I would say 87. We're at 88. But you have no confirmation. So before you buy Exxon, you have to make sure that the sector is strong. Because if the sector is weak, mind you, Exxon is still a good buy. They're going to return money to shareholders. They may up the dividend. They may do a special dividend. They may announce an enormous buyback. There's a number of different things that Exxon can do. They are basically a money printing machine. They have continually brought the cost of oil for them. I think they make money over $40 a barrel now. It's all pure profit. That's what's crazy. But I wouldn't buy it. Again, we're in an AI and a GLP-1 market. Find the things that work. Energy will work. I just think there's too much political power in energy right now to actually bring it down. Solar power is working. You look at First Solar, that thing's soaring. I forget his name, but off of Instagram. I'm curious, what percentage of your total portfolio is allocated to ETF? VST, long-term buy and hold question. VST, which one is that? Is that the total stock market? Oh, Vistra Corp, VST. Let's see, Vistra Corp, VST. This one had quite a run. I mean, algorithm makes you 155%. Buying and holding makes you 227%. Just got you in, but got you right back out. A little bit weak there. Let's see VST on Seeking Alpha. VST is a hold. This one is utilities. It's a utilities ranked number 1 out of 6. Independent power. I mean, it's a power. It's a utility. They're restricted on what they can the amount of money that they can actually make. But it's a power company. I mean, if we go down here and we see, let's see, bulls say the company has the right mix of strategy, execution, cash generation. Despite its heavy and expensive debt load and stock price jump, Vistra optimally positioned in strong markets. I mean, it's retail Texas, East, West, Sunset asset. It retails electricity and natural gas to residential customers. As the price of that stuff goes up, they're able to make more money. I mean, I don't know too much about the business. It does have it as a hold. Let's see how many Wall Street analysts. 10, 7 have it as a strong buy, 2 as a hold, 1 as a strong sell. The average retail price is $108, so it's up 25%. But I will tell you, that stock chart looks incredibly weak. So I don't know. I mean, I don't want to buy and hold a utility. That's just me. I mean, honestly, I wouldn't buy and hold it. Now, as far as what percentage of my total portfolio, I posted this in the newsletter a couple days ago. I'm not sure which one it was, but it shows that, 40, 45%, almost 50% of my portfolio is Apple. Then I've got like 7 or 10% Microsoft and Google. It just kind of flips. And then I've got Amazon. And I don't know where those kind of run. And then I've got 4 or 5 ETFs that are the next kind of largest ones that I hold. But I will tell you that probably 85% of my entire portfolio is single stocks. So I don't know that 15% is actual, I mean, 85% are large holdings in single stocks. So I would say it's probably maybe 10%, maybe less than ETFs. But I also added a note to this person, and I think it's not Michael, I forget. It's not very large because it's 50%. I also added, do not follow my portfolio. My portfolio is not yours. I do not have the same risk tolerance as you do. I will give you all of the stock tips that I think are good, but I will not tell you, hey, you should buy this because I bought it. And if you're doing that, you're doing it wrong because you have to do your own research. That's the basis of it. And part of your own research could be the scans, the 4-hour algorithm. Part of your research in Trendspider could be, hey, I want Gary's 4-hour algorithm. I want Gary's 5-minute algorithm. I want the 65-minute algorithm. I want to trade on these things. Well, you can get it this weekend for Father's Day. $53 a month is Trendspider. I give you all the scans that I use, all the scanners, watch lists, everything. Everything that I use, you can use, and you can set up your Trendspider. Go with the enhanced for $58. Holy crap. Get that one. It's only $5 more. That is a great price. So $58 gets you this enhanced one. I mean, you can't beat that one. Now, say you have your own charting program. You like E-Trade, you like Thinkorswim, you like your Merrill Lynch, whatever they have. You like your Schwab, whatever they have as charting program. Or you like Webull. I mean, you can get a desktop software. Say you got Webull. Go over to my link tree if you don't have Webull. It's the 4th link. You get free stocks. And say you have the charting program over there. I would argue that your next step for a tool is Seeking Alpha. And Seeking Alpha Premium is 20% off. This is where all those articles that I post, you can read them ad-free. You can go to the homepage of Seeking Alpha. We just talked about it. How to find out the most recent quant stocks. You set up your homepage. You basically customize your homepage on Seeking Alpha. And it's everything that you need to do. You put your portfolio in here and you import it. It gives you a score. You can set up your own screeners in here. You can basically set alerts. So, you can do all of that in Seeking Alpha. So you don't need Trendspider for it, but you could do it in Seeking Alpha. And it's $189. It's 20% off. Now, say you want to even do less than that, and you just want Alpha a pick. The new one, by the way, is on Monday. Monday the 17th. They're going to do a webinar on Monday. I think it comes out the 15th, but they're going to do a webinar on Monday. Now, this is Alpha Picks is 2 stocks. Get $50 off with the link that I have in my link tree. It's 2 stocks per month. This is a crazy, crazy good return. If you want to follow stocks, don't follow me. Follow these guys. It's $450 per year. That is a phenomenal price compared to the return that you get. What they have, 9 out of their 12 stocks that reported in the last couple of weeks have raised their guidance and have been up more than 10%. I don't know. I mean, you can go over here and read all about it. How does it work? Stocks are picked by the Seeking Alpha Quant team. Alpha Picks takes into account company fundamentals, valuation, momentum, growth. When a stock no longer scores well, they tell you to sell. They tell you to sell. Who is Alpha Picks for? It's designed for a buy and hold investor. It's designed for those people that don't want to trade frequently. It's designed and not designed to generate dividend income. Covers multiple sectors. This is basically a return portfolio. It's investing in growth. It's looking at the fundamentals of a stock. They're taking into account some of the technicals, but they are absolutely taking into account more of the fundamentals. So, by the way, we're up on QQQ, just so you know. Let's talk about scans, because scans, if you go over to the Daily Stock Page newsletter and you just click on it and you scroll to the bottom, if you're going to sign up for the newsletter, this is the whole reason to sign up. Honestly, you can look at the articles. I spend a lot of time on those articles, curating them, making sure that the links are right, making sure that you have the opportunity, making sure that all the social requests are taken care of and answered. But scans is the big one. This is my 4-hour algorithm scanner. And basically, I go through here and I post all of these. And yesterday I posted, I like Powell. I like ELF. IWM, buy it under 200. It is under 200. At least it was. But here, let's go over the scans today. Because what happened? Well, NVIDIA shows another bullish entry in the algorithm. Doesn't mean that it's going to show up here as an entry because you bought way back here on April at $83. It just tells you, hey, if we weren't in this, we'd have another entry here at 130. The algorithm basically tells you, yes, if you buy at 130, you have a 67% chance of winning. 67% chance of winning, because the algorithm over 24 months makes you 643%. Now, over 24 months, what do you get if you buy and hold? 586%. So the algorithm has a buy up here. This is part of this. So this will be included in this win, but it says, hey, there might be another chance for you to get a little bit more out of this. Another chip company, Qualcomm. This has been just a legendary run for Qualcomm. Same thing. We got this algorithm buy in here at 162 on April 25th. You're up here at 215. It's telling you, it's time to buy again. Look at the MACD coming down, crossing up right there. Yeah, and then here's the RSI. It's at 64, coming back down. Part of the core portfolio, UNH, United Healthcare. This one has a buy, and it is probably a new initiate buy. Yeah, 497. I tell you this: buy under 500 and sell over 500. This is a stock that's in a clear trading range. And it's been this 450 has provided you the ultimate support. But if you buy at 497, you're at 492 right now. It'll go over 500 at some point in time. Core portfolio again, Netflix. This is one that I think is going back to 700, 2% up today. Now we can see this one has had on the weekly, we just glanced at it, but this one has had this is another one where we had this great buy at 549 here in May. It's adding another leg up. That's what the 4-hour algorithm is telling you. Hey, it's another leg up. One that I will be adding more to is Dell. Now, Dell has been, we talked about the earnings before. It's been trading sideways since then. It's been using that 132 as its support level. 133 right now. The algorithm got you in at 135 this morning. We'll see. I am going to add to this position. It's again, I listened to this algorithm. The algorithm makes you 175% over 24 months. 175%. You make 166% if you just buy and hold. You win 65% of the time. I'd take that at blackjack any day of the year. So we've got DocuSign, we've got NXC, we've got VYM, we've got a sector, materials, XLB, which has been incredibly beaten down. This is materials. This is right at the 200-day here at $89. What you can do is you can go over you can see, hey, this sector got a buy. Let's see, what are the number one holdings of XLB? Let's go over to Seeking Alpha. Let's look. It's a hold in the quant. XLB is a hold. Seeking Alpha analysts say buy. Liquidity A+. Let's go and look at the holdings. What are the holdings of this? Lindy, Freeport. I would argue Freeport is probably more of a buy than XLB. So you can take a look at these and you can look at, it's only 31 names. So XLB, if we look at the algorithm makes you 48% over 24 months. If you just bought XLB, 24 months ago, you made 3%. This one protects you against that downside, gets you in. Look at that nice buy at 83, and it took the leg up. If you look at the weekly on this one clearly is just in the trading range. So if you buy at 88 right now, or 83, it's trading at 88. If you buy at 88, I would say that 95 is probably your resistance level. So makes sense, but it is what it is. CLS. I brought this one up on a paid newsletter over the weekend. Over like 2 weeks ago, this was one of the 5 alpha picks that I picked in that newsletter. If we go over here to the newsletter and I click, this is Celsius. This is an alpha pick stock that has just been soaring. And if you go to the Daily Stock Pick newsletter and you go down here and we go to the Education Center, creating my top 5 picks, Celsius is one of them. CLS. Since then, it has been, this is what, May 11th? Let's look at Celsius since May 11th. May 11th is, May 11th is right back here. Let's see, yeah. May 11th, it was selling, that's May 10th. Let's say May 13th. We got in at 49. You're at 55. I mean, 13% since then. Gets you in at 56. You're trading at 55. MACD, low. RSI, midway in no man's land. Perfectly fine. CLS is just a stock. If we go over to Seeking Alpha and we type in CLS and we look at CLS, it's a strong buy in the quant. This one, you look at the value, everything looks like it's good. Look at the growth. Year over year, you're growing 10%. What's the sector growing? 3.4%. If you look at the valuation and we look at the PEG versus the growth, again, 0.17. Sector's at 1.2. It's 85% below. Information technology. So if you want, just look at that. Oh, it's Solistica, not Celsius. I say Celsius because somebody put Celsius up. Solistica. Chris corrected me. Okay, your boy who's hyped up on sugar is getting a little hot in here. It's getting hot in here because the air conditioning, I think, is turned off. But we're positive. Again, don't pull out of the market. It's a Friday. Don't make any big moves today. You want to make sure that your portfolio, if you're not sleeping over the weekend, change things. Change your portfolio. It's 56 minutes. I'm out of here. Have a good weekend. The paid newsletter will be out tomorrow. Remember, sales on Seeking Alpha, sales on Trendspider, sales on Alpha Picks. You want to take advantage of those sales. Take care. Have a good weekend. I will see you Monday. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.